Welcome to another episode of The Financially Free Investor, where you will learn information and strategies on how to become financially independent by investing in real estate, something that is not taught openly in our society today. Financial freedom matters so you can live a bigger life, retire early, and do what matters most to you. Get ready to hear tried and true methods to becoming financially free with your host, Jordy Clark.
All right, everyone, welcome into another episode of the Financially Free Investor. This is a special episode. It's the Real Estate Rapid Fire. I got my good buddy Jay here. How you doing, Jay?
Doing good. What's up, everybody? Ready to rapid fire about some real estate.
Sweet, man. This is the first time you guys are tuning into these episodes. We just kind of look at articles and kind of take a few minutes to just see what's going on nationwide, here locally in Salt Lake, maybe other markets that interest us as well for various reasons. But yeah, man, how you doing? I know you've been traveling a lot lately.
Yeah. You know, it's interesting. It's interesting to travel with price of travel going up, you know, and I stay in hotels when I travel. And so the cost of rooms is going up. And I wonder, you know, I just wonder how that, I can't help but think, how's this affecting real estate, right? Whether it's the actual hotel real estate itself or the real estate around it, single family homes, apartments. You know, it's easy to assume inflation, you know, everything's going up, everything's getting more expensive. But I just wonder how it all correlates with each other. But yeah, it's been fun. It's been fun to get around. We've been looking at some big multi-family deals, and it's been good, man.
That's good, man. Yeah, you went and toured some apartments in Nashville. No, it wasn't Nashville.
Where was I? Tennessee. I get them confused too. Knoxville.
Yeah. How was that?
Yeah, it was fun. That was really fun. You know, a little different than the Salt Lake market, our beloved Salt Lake City market. Some parallels and some differences for sure. But one thing is happening everywhere, and rents are continuing to go up. And I think as property owners, I mean, they kind of have to. We're paying more for properties. Property taxes are going up. Any work that we do costs more. And just trying to manage that, do right by the tenants, give them a really good place to live. You know, we talked a lot about what tenants want these days, what they're looking for, how they've changed over the last 10 years. So really, really cool.
Oh, that's awesome. So, I mean, what maybe give us 3 highlights. What changed over the last 10 years? What are people looking for?
Get rid of a pool and put things for pets. nobody, you know, the pools help sell the building, but nobody uses them, which was interesting. I mean, I love a good pool too, but amenities have changed quite a bit. Used to be maybe a game room. Well, now it needs to be a gym, right? You got to have that little gym checkbox for the amenities. One of the things, this was kind of funny. You and I were talking about this the other day as we were walking a property here in Salt Lake, but this is a difference between being in the South and being out West. But smoking, you know, they still have to allow smoking, you know, and you all begin to know me as impartial Jay. I just take action. I don't think about my opinion much. I just take action on what makes sense. But you know, in Salt Lake, we were touring this property and it had a no smoking sign. And I was like, this makes sense. Can we do this here? Because they were talking about how they would have a riot in Tennessee if they put up a no smoking sign, you know, or everyone would move out. So I thought that was interesting, kind of different markets there.
Yeah, that is interesting. Definitely not a protected class in Utah yet.
Yeah, it still is in the South, which is where I grew up. Shout out to my peeps.
Yeah, no, it's awesome. Well, good. You got to tour some facilities, just learning. That's good.
Yeah, Yep. Being around other real estate people, one thing that came up that I think super relevant here is, so rates went up. Yep. We thought that they would. And there was a big conversation, we're in the 25 basis point world where it's like, oh, is it going to go up 25 basis points? Well, it went up 50, which is where the Fed said it was the top of where they would set it. But I wrote this down from the event. So if the average home price is 450K now, which is also risen, it's pretty expensive. That went up pretty quick, but almost $500 increase in your monthly payment for that house since January. $500. That's real money, since January. So, that how's that impact us, right? What are we going to see out there?
Yeah, no, that's interesting to think about. It'll be interesting to see how it plays out because, on one hand, we've got crazy inflation on everything, like lumber is just more expensive than it was a couple of years ago. Labor is more expensive. Gas is everything's more expensive. And so it's going to be interesting to see what plays out. In a perfect world, if you say, hey, well, as interest rates go up, prices will come down. I 100% agree with that sentiment. However, does that correlate the same when, you can't get materials to build more houses and you can't get subcontractors on site and, will prices go down? I don't know. Builders are going to have to keep building to stay in business. There's just so many conflicting data points. So it'll be interesting to see what happens. I know a lot of people probably locked in, low threes, high twos on their interest rate. And a lot of those people aren't going to move because for them to go, one step up and get an extra bedroom or two or, bigger yard, they're going to have to almost double their payment. So, the equity matters less when people buy houses and cars on payments. So.
Yeah, this is where I start to see a little bit of a difference between residential and commercial, kind of to your point, when you think about the basic consumer versus, say, a multifamily property owner, because I agree, thinking about the consumer with the single family house right now, you just don't move. You just, you don't have to have that bigger house with the bigger yard. I've made that decision before in my life. Okay, we're not going to do this right now. This doesn't make sense for us right now, and so I think they have that opportunity. And you also, the other side of that person doesn't have to sell their house, right? There's, unless they're moving for a job, there's a few reasons, but generally you don't really have to sell your house. The commercial market, with the way commercial debt works, I think is going to be interesting. And maybe we see, so I guess sticking with the single family houses, therefore we probably won't see a huge decline in pricing because people just won't sell. Like, okay, hey, I'm not going to get what I thought I could, so I'm just not going to sell. But the commercial market may be a little different because, again, the way the commercial loans work, it's typically, something needs to happen within 1 to 5 years between the bank, the investors, interest only, balloon payments, all these different things that make commercial deals make sense. There may be a little more pressure there to actually sell. And so if that's the case, then we'll see prices come down a little bit in the commercial market. And so I think that'll be interesting. I don't know how big that is. That'd be a cool data point to see over the next 2 years how many loans are basically coming due. Somebody needs to do something with their loan in the next 24 months with a commercial property. I bet it's a large percentage of commercial loans out there. So that'll be interesting.
Yeah, we'll see what happens.
Yes, we will. And we will be ready no matter what.
Yeah. And, there's a lot of people who, I'm sure you get this too, but they talk to me about investing and they're like, man, is now a good time to start investing? And I'm like, well, I mean, it depends, like, on a lot of stuff, but for the most part, I think, yeah, like everyone should be investing, and it's almost like dollar cost averaging, right? Because we don't know what's going to happen. There was no way to guess, for the last 2 or 3 years, we'd have record appreciation and rents going, 15, 20% without having to renovate or do anything. So, I mean, dude, just being in the game constantly. And that's where, the professionals separate from the amateurs, because professional can make money in any market, right? Everyone can make money when the market's going up.
Yeah.
Professionals know how to make money. It doesn't matter if the market's flat, if it's going down, like they'll find the deals, they'll operate them correctly. And there's opportunity in every single market. I mean, gosh, we added a ton of units to our portfolio in what has been the hottest ever real estate market, and all of them were below market value, and we did something to improve them. And so, I mean, no matter what happens, as long as you're buying good deals that make sense and protect the downside, you'll be okay.
Yeah, that's where it gets fun, strategy comes into play. I got started in real estate in 2009, and I didn't have to be that smart, I just needed more cash. But over the years, I've had to get a little bit smarter, and work on my strategies like you. And so yeah, we're ready now, man. You mentioned investing. I like to use the tree analogy. The best time to plant a tree is 10 years ago. The second best time is today. So you thinking about investing, you need to put some money on the table, so you need to get started today, because you're absolutely right. Over time, a lot happens.
Yeah. And, I think the problem is so many people, they try to time the market. They're like, no, I'm going to buy low and I'm going to sell.
Yeah, good luck.
Like,
Go to Vegas, baby.
Yeah, go to Vegas. Like, give me your crystal ball, because I need to know the exact moment in time that, we're absolutely at the peak. Yeah, well, dude,
I try to time the market too. I try to hold it all the time.
There you go. That's good. Yeah. Well, dude, just going back to that article, 500 bucks a month increasing payments. I think it's cooling sales down, which
I'm
is
glad
good.
you brought that up. Yeah. So I've got a percentage to that. In April, sales of newly built homes tumbled. Tumbled. I don't know if it's a tumble, but down 16% while prices continue to rise. Interesting.
Yep. Yeah, and I mean, we represent, my sales team represents a builder here in Utah, and I mean, things are definitely shifting. The last couple of years, it's been really easy to sell a home, especially new construction, because that's all that was available, right? And a lot of times people are going to new construction because they can time the sale of their house with the purchase of their new house, because they can go put their new house under contract, and if it's going to be built in 7 months, they can go, okay, well, we're going to list our house in 5 months or whenever, and then get a 60-day lease back, and that works. It's great. It's a great strategy. I think what's happened a lot.
When it works.
Yeah, it works until interest rates go up 2.5%. All of a sudden, the house you put under contract 9 months ago, your payments almost double, and you're like, oh man, do we walk away from our construction deposit? And I wonder.
Are you seeing any of that, by the way? You seen anybody walk away from the deposit? I don't know what's a deposit these days. A couple grand, big grand, 10 grand.
It definitely depends on builder. Every builder is different. Depends on how much you're putting in upgrades, and obviously the more custom you go, the more of a deposit they want. But yeah, I mean, if you're building a little townhouse, your deposit could be as little as probably $5,000. And if you're building a custom home, I mean, you could be $100,000 to $300,000, $400,000, depending on what they require. So the interesting thing is, I've got another friend that sells for a very large home builder here, and almost every week they're having houses cancel, come back to market. They're completed. The buyers can't close because they can't afford it. They're scared off by the interest rate. And the crazy thing is right now, at least they're marking those houses up. So they're still able to go, hey, this $500,000 townhouse, someone contracted on it for 475 and then they put 20 grand in upgrades. So the buyer that's canceling is locked in at 495. Well, they're going, oh, now the market, we're selling these for 600 or 550.
Yeah.
And so they're just going, okay, well, we're cool. Here's your deposit back. Sometimes not. I don't know. It's all individual situations, but then they're listing 550 and getting multiple offers because for other people, everyone has to have a place to live, right? So
yeah,
there's again opportunities in every market. So it'd be interesting to see, maybe. Well, I will say I would agree that I think sales of new homes are slowing down a lot because there's a lot of uncertainty in the market, and for it to drop 16%, like I'd say that's significant. But prices
especially
are going up,
April, right? And you're the residential guru. April's typically, I mean, it's a pretty good month, right? We get coming into summer where things really heat up. I know at least that much in residential market. So I don't know what the gap is there. 16% still sounds significant, but you consider that based off what I would consider normally probably an uptick month, then the gap may be even bigger.
Yeah, I mean, there's housing starts and then there's housing sales, and every builder does it a little different. Some of them, they report a start and they report a sale because they let someone pick everything out, top to bottom. Others, like the builder I represent, they pick everything out and they get the permit, they start building it, get it 2-3 months along, get it framed, and then they release it for a sale. So, someone only has to wait 4 months instead of 8 or 12 or 16. So yeah, no, it's definitely slowing us down, the interest rates. And that's not a bad thing. The thing I worry about, frankly, is if rates continue to rise at the pace that they have risen the last 90 days.
Yeah.
Because then, we're going to go from mortgage rates in the 5% range, which is still historically low, but then we're going to be like 7% range.
Yeah.
So on a non-owner occupied, you're probably going to be looking at 8%-ish.
Yeah.
Well, man, if it's tough to cash flow at 6%, it's going to be impossible to cash flow at 8%.
Yeah, it's going to squeeze for sure. Yeah, I mean, rents can't go up fast enough to keep up with that. No question about it. Yeah, I think that is the big question. I mean, it seems like the Fed's still super aggressive, super bold, and super committed to going up quick. So I would expect this year to just keep continuing the reaction and interest rates going up. This was an interesting article here from my people at Marcus and Millichap. I like those guys. They do a lot of data stuff. It's talking about inflation kind of hedges. So, and what the tightening the Fed policy really means. So inflation resistant property types, they have 3 of them. Multifamily, yay. Self-storage, makes sense.
Yep.
Hotels, I don't know. I'd like to talk to him about that. I don't know how that one works. I could see that one playing out, but I love the first 2. We'll take any of those in Salt Lake you can give us. We like those. Then it says plan for rates rising. I think that's a big no duh to everybody.
Yep.
Lock in the long-term debt. That's what we're trying to do, Jordy, on our stuff, right? Get as much runway as we can.
Yep.
And this was interesting. Strong household balance sheets still support commercial demand space. So what did I see? It was a chart, first time in 30 years, I think, that the household savings balance was above the household debt. So that's good. That shows some consumer strength, and the ability to be able to support higher pricing on things, rent, groceries, things like that.
Yeah, I mean, again, like it just depends on where it goes, right? Like I saw gas at like $7 a gallon in parts of California. And I mean, just thinking about, because we own a home staging company and we get furniture trucked in a couple times a year, truckloads of furniture. And the diesel, we're talking to the truck drivers, and what used to be $500 to fill up one of their tanks is now 1,500, right? So you think
Crazy.
about, man, like just yeah, it is crazy. So if we keep seeing higher and higher fuel costs, then that translates into everything. Groceries are going to cost
Oh yeah.
more because everything is trucked. So
Oh yeah.
but what you said was interesting to me was the hotels said they would fare somewhat well, right? And
Yeah.
the thing I think of, as more of a residential guy is right now it's like everyone wants to own an investment property that's an Airbnb.
Yeah.
And that,
Sexy.
yeah, no, it is super sexy.
Till you gotta manage it. Nah.
Yeah, you're not wrong. I've owned several, and trust me, it is
You love the management. I know.
anything but passive.
Yeah. Yeah, it's
Uh,
definitely not passive.
no, but I mean, you can actually do fairly well. We
Yeah.
own one
Yeah.
together,
Yeah.
and
Yeah, for sure.
it's got its ebbs and flows. But
It's
I'd say,
ebbing right now. It needs to flow.
yeah, yeah,
It's a weird month in Salt Lake. That's all right.
yeah. It's shoulder season. It's
That's right.
ski season's
Yeah.
over. We're all sad
Yeah,
about
we'll be all
that.
right. Summer's coming, I know.
Yeah, but I mean, you don't have the consistency, and if you can't weather the storms, or your payment's super high because your interest rate's high, like there could be some
Yeah.
issues there. And then my
Yeah.
big concern, and I sent you an article on this. I mean, I'd love to get your take on it, but this was an article I got from AirDNA, which, if anyone doesn't know what AirDNA is, they're basically the back end of Airbnb, which
Mm.
looks at occupancy data, average nightly rent. They look at a whole bunch of stuff. So if you're trying to analyze, hey, is this going to be a good investment? AirDNA is a great way to go because you can look at data. Um, but the email that I got was Airbnb occupancy is down year over year. So, I mean, I'd love to get your take on that. And the interesting thing is it said occupancy fell in destination markets and small cities, but rose in urban areas where bookings are pacing ahead. Economic
Yeah.
uncertainty was no match for short-term rental demand, which was up 25% year over year. So there's more demand, but some occupancy is just getting crushed.
Yeah, man. And so, I live in Park City, Utah, and that would be a destination market for sure. And a couple of thoughts on that. I mean, first of all, Airbnb, I think super cool, but you and I talk about it a lot. I think this is going to be something we're going to be talking about in real estate for a decade. And there's going to be a lot of crazy stuff happen. Government regulation, there's going to be all kind of crazy stuff happening. And some opportunities for sure, and some risk, no doubt. But two things I think on the destination occupancy. Number one, I don't know if I want to be as bold as to say COVID's over. It's mostly over. And so I can tell you, living in Park City, Utah, man, people during COVID, people came to Park City. And I think they went to Florida. And if they could go, they went to Hawaii. Some people worked remote for a month or whatever. So the Smokies, holy smokes, the Smokies were on fire. And now I think some of it's kind of just settling out to what I would call normal versus down for destinations. And the other part of that was urban areas. So I stay in an Airbnb now sometimes for work, got a little kitchen. The price is cheaper than a hotel. Nobody's bothering me knocking on my door because they're at the wrong room, and some of my colleagues do that as well. And that's where it's going to be really interesting in terms of how the overall demand for Airbnb and where just continues to evolve. Super interesting.
Yeah, I know. At our little Airbnb that we own in Salt Lake, we've had a couple people that stay for 2 or 3 weeks, and they're working remote, and they're like, wanting to get to know the city, and yeah, it can definitely be a great way to go. It's gonna be interesting, like you said, to see how it plays out over the next decade.
Yeah, you definitely get more money renting something smaller durations, but you have to account for when the unit is not occupied, and you have to account for the what if. So the management cost more, and a lot of times you're buying a more attractive property in a more attractive area for that short-term person. And so what does that mean? It means it's more expensive, it means your payment's higher. So, the overall cost of owning and operating compared to a single family rental is definitely more. So it'll be interesting to see how big that gap is. In the real estate world, we're constantly talking somewhere between 5 and 15%. Maybe every once in a while we get above 15%. And we talk about IRR or after a refinance or a sell or something like that. But Airbnb, sometimes you're talking 40%, but your cost is so much higher.
Yeah, and you gotta worry about just other stuff you don't have to worry about with long-term rentals usually. So
definitely.
Yeah.
Like, where's my towels at 9 o'clock on a Friday?
Yeah.
I can't get in.
Right.
Call the manager. Yeah.
Yeah, it's hospitality. That you literally own a mini hotel.
Yeah, you're in the service business, buddy.
Yeah, and it's not necessarily like, hey, we'll get a maintenance guy out there on Monday. You want it now.
Yeah,
I worked at Grand America for about a year. I was a bellman, and being in the service industry is like you got to be spot on. You are delivering an experience, and like if you're not, then the guests will never return, right? And then they're going to tell all their friends how terrible of an experience they had. So
you just sent me this one. I hadn't had a chance to read it yet, but what about this HACCP?
This is interesting. So this is the Biden administration unveiled the Housing Supply Action Plan, HSAP, a new proposal that aims to make home ownership and renting more affordable. Anytime the government tries to make anything more affordable, in my opinion, they just
the old track record's not so great there.
Yeah, they got 150 years of screwing that up. The median home price in the United States has risen nearly 47% since April 2019, and rents have increased over 21% in the same period, according to BiggerPockets internal data. This is a BiggerPockets article, by the way. Shout out to BP.
Brandon and David, my boys. I guess it's just David now.
Yeah. So I mean, basically says they've got 4 kind of legs that this proposal has: zoning reforms, financing, owner occupancy, and cost controls. So it says, yeah, right. It says, we've all seen the reports that say, hey, we're 5 million units short in the United States, and Moody's Analytics actually says it's like 1.5 million, which I think that can actually get absorbed pretty quickly. If times get tough, people lose jobs, you move into a family member's house, sleep on a couch, you go spend $100,000 on a Sprinter van. I don't know, but you figure it out, right?
Yeah, definitely.
But here's the interesting thing. I mean, it's no surprise that we've had ultra low interest rates for a decade. But when 2008, 2009 hit, the Great Recession, so many builders, because that was caused by housing and financing, and if you've ever seen The Great Short, that whole story. But so many builders just went out of business because the decline in prices was so so steep, so quick. Builders just went belly up, lot values went down by 80%. And, great opportunity for some, but a lot of builders didn't get back in for 5, 6, 7 years because they were dealing with bankruptcies. They were dealing with just clearing up that whole mess, right? And builders take a big risk. They got to buy the lots, and then they got to get the construction loans, and they're funding this whole thing until it closes 8, 9, 10 months later. And so, I think a lot of the smaller builders just said, nope, we're out, and, stopped building for a long time. So anyways, just fast forwarding through the rest of this article, they're basically saying this proposal aims to finance the building of 800,000 new rental units for low-income tenants and expand financing access for building accessory dwelling units. It says that it also goes down saying they want to focus on helping more owners purchase homes and be owner occupants versus renters. So their plan there is to have the Department of Housing and Urban Development, HUD, sell their inventory of properties, which is estimated to be 125,000 units, to would-be owner occupants rather than investors. And then they put another thing in here that says they're going to try to control costs amid the backdrop of high inflation. I don't know how they're going to do that. So, just the proposal, it is interesting though, because, I remember talking to people when Obama was in office and they came out with whatever the first grant was, right? $10,000. And that grant kind of got you, that's your down payment into a house. And, that
I got that, by the way.
Oh, cool.
First time home buyer credit. Can you believe it? Back in 2009, I was a recipient. Can you believe that? First house.
Believe that. That's awesome.
Guess what I did? Bought another house. I said, great. I'll buy 2 houses.
There you go. There you go. One for you, one for the wifey. It'll be interesting because I think that would drive up prices.
Yeah.
You're buying something and it's not your money. The stimulus money from COVID sure showed us that you'll spend it, you'll blow it. Most people will blow it. They're not going to save it. So, what do they care if they drive up the house price another 10, 15,000? That could lead to some interesting times in the residential world.
Yeah.
The general rule of thumb is the looser lending gets, the closer we are to, declining house prices. And we saw that back in 2008 where, you fog a mirror, say you make whatever you want to make, stated income, ninja, no income, no job, no assets, get whatever you want. And that obviously has disastrous consequences. So be interesting to see.
It will be. Yeah, this one will be interesting for sure. The government, man, they got a button on the desk, I think, somewhere that just says bailout, in bold. And it's like, we've got a problem over here with this. And then somebody just hits the bailout button, and some of that's kind of scary for what it means and does long term. But number one, I think you and I are all about somebody getting a house that wants a house. I think if you're shooting for that, man, we're with you. We hope you get it. We hope you can. Hope it makes sense. If we can give you some advice, we will. But man, I've been a renter before, and I could afford a house, but I rented because wasn't sure how long we were going to be there. There's a bunch of reasons. I enjoyed my renter days a couple of times in life, but so I don't think that's a bad thing either. I think they mentioned it's this one's all about execution. Like, how are they going to make that one happen? And some of them are scary, and some of them are like, hey, we're going to change zoning a little bit to allow for an ADU. I think that makes a ton of sense. And if you're in Austin, Texas, if you're in San Francisco, some of these really expensive markets, young population, man, that ADU thing makes sense all day, right? Europe's been dense for a long time. We got lots of space, so we can fill in some of our land as well. So there's some options in there that I think could work for both sides, but there's also a few in there that, to your point, you move one lever, the other one goes crazy. And I think you just, whether you're the government or a person, you gotta be careful with some of those.
Yeah, it can definitely be abused. There's a lot of people who shouldn't own a home,
Yeah.
There's a lot of maintenance that goes into home ownership, especially the older your
Yeah.
house gets, the more maintenance you have. And
I'd say don't rush it.
yeah,
I tell people all the time, I love America. I fought for it. I've got an American flag behind me in my office. But this whole American dream is a single family house. Nah, man. Not that's not the American dream. America got a lot of the dream, but you don't need to own a house. It could be right for you or not. But nah, I'm with you all the way. There's no down payment, rent sometimes lower than the mortgage, especially right now. Invest that money. That's what we did for a long time, rather than throw a whole bunch of money at our personal house and then we got to pay for it every month. Man, I was putting money in investment property and we were getting cash flow. So don't rush it. Do it when you're ready, but don't rush it.
Yeah, absolutely. Cool, man. Well, I think that about wraps up our real estate rapid fire today.
Beauty.
You got anything else?
It's always fun, man. No, just look forward to, we talked about getting some input from the audience, now that you've been out there for a little while and you got some listeners and followers liking your message. I love what you're doing with this show, hearing from your audience, audience questions. Hey, what do you guys think about current events? What's happening in the news, policy changes, how those are going to affect real estate? Questions for us, what are we doing? What are we buying? How are we changing our buying strategy? Whatever we can do to be helpful, relevant to you guys and your audience. Jordy and I just like to come on here and spitball. So feel free to throw something at us and we'll chew on it.
Yeah. So you guys can email real estate rapid fire in the title. The email is thefinanciallyfreeinvestor@gmail.com. So, so shoot us your questions. I guess I'll give the folks a little update here. You and I are under contract on a 16-unit apartment.
Yeah, baby.
That'll be closing probably in the next 2 months.
Yeah.
I personally sold a single family house that had appreciated really well, and it was one that I was okay letting go of now. And what we're doing is we're doing a 1031 exchange, and we're buying a brand new construction townhouse. We're buying a fourplex that I sourced off market, and then a duplex that I also sourced off market. So adding 7 units to my personal portfolio. We're 3xing the cash flow that we were getting from that one property, and also 3xing the dollar amount of real estate that we own. So if inflation continues to go high, we'll do all right with it, because it'll hedge right against it. So yeah, that's kind of what's going on in my portfolio.
Yeah, I bought a single family house. Said I wasn't going to do any more of those. Nah. We got the fund coming up. I'm really excited about that. We're focused on portfolio purchases of single family houses here in the greater Salt Lake area. Super excited about that. Big win for our investors, big win for our tenants, and a long-term win for us at Silicon Slopes. So that's a big something I'm really excited about.
Yeah, and if you're an accredited investor, feel free to email us, deals at thefinanciallyfreeinvestor@gmail.com, and we can get you on our private syndication list if you're accredited. You'll have to answer the normal questions for that, but we'd love to have you on board and grow with you.
Yeah, love it.
Cool, man. Well, dude, I got to take off. I know you got a busy day. Both got toddlers running
with you guys,
running our lives. So always good hanging out with you.
Sounds good, man. Well, thanks for having me on. Pleasure to be with you all, and hope the audience got something out of it. We'll talk to you soon, brother.
Okay, we'll see you, man.
Thank you for joining me for another episode of The Financially Free Investor. If you found value in this episode or know someone who would find value in this information, please share with them, subscribe, and send us a review.